Hi, Shae Russell here from the Daily Reckoning Australia, and joining me today is your other Daily Reckoning Australia, Callum Newman. Callum, how are you, mate?
I'm really good, Shae. Yourself?
Not too bad for lockdown day 3 in Melbourne, I believe. Yeah. Not that I'm counting.
Yeah, I'm not happy about that, but anyway.
Neither am I. I just did 30 minutes of homeschooling before I came on here, and I'm not a fan. All right. Now, last week we made a promise to talk about one of the greatest Aussie pastimes, and that is we're going to talk about Aussie property today. Let's talk about where the market's going, because I know you follow a particular cycle, which for years I didn't believe in, but I'm now a sudden convert. Also, too, let's talk about property-related stocks. So pick your poison. You're going to go with property first or property-related stocks first?
Well, I'll start with property stocks, actually, because if anyone's watching this and they're skeptical about the property market going up, the best thing you can do is go and look at the stocks related to property on the stock market. And it's very clear that the market is pricing in better times for property and has been for a while. I learned that a long time ago because there's so many opinions about property, and God knows, since I started with Agora in 2012, I mean, there's been a lot of property bearish commentary in that time, and it never came to pass. But if you looked to the stock market, most of the time it was pricing in a better future for property, which appeared until we sort of hit the big glitch in 2018 with the Royal Commission. And then things were sort of rebounding again. And then, of course, COVID came along and upended everything. But, again, the stocks are on the move up. There's multiple examples of that. One I should have bought or recommended, and I still regret that I didn't, is called Lifestyle Investment Communities. I think it got down to like $5 at the bottom of March. Now it's almost 15. So, and that was with a well-run business, strategic assets everywhere, big rent roll and all that sort of stuff. Now, I'm not saying you buy it now. You know, our compliance officer is always hot on these videos of what we say. But that's an example of like how the market just dragged everything down with it with COVID, and then now it's pricing in a brighter future. So that's one way of seeing it. Cedar Woods property, some of the builders are they're getting boosted by the home buyer grant, Tamworwood, etc. As you pointed out last week, the government is throwing all sorts of money here, and they've backed up the banks with the Job Seeker and JobKeeper through the whole crisis, to make sure their bad debts never threaten them too much. So it's back to business as usual in a way, and even the mainstream press, it doesn't seem to matter what happens. Is the market is roaring at the moment. There's a lot of demand there. There's state buyer grants. Now, I say all this, I don't want to sound like a shrill for the real estate industry, because I don't, that's not where I'm coming from. I just point out what's happening because it has a lot of implications in various different ways, and there's trading opportunities there. There's investment opportunities. So, yeah, from the ground, it's looking bullish.
I've actually got 2 topics I want to pick your brain on. The first one is immigration. Now, I've written before in the past about how crucial immigration is to propping up the Aussie property sector. We could be looking at, absent net migrants for a very long period of time. What will that do to the Aussie property sector, do you think, if we've got no new people coming into Australia?
Yeah, I've seen a few people talk about that. I think they'll bring it back. I think if it ever became an issue, they would find a way to bring people in. Like we say, the government does everything they can. If it really became acute, they would just load them up with a vaccine or God knows what. But I think for sure that's going to affect a market like Melbourne that was drawing in, and Sydney that were drawing in most of the migrants to Australia. But the sort of flip side you don't see so much is domestic migration. So Victorians leaving to where the wealth is being created, for example, and at the moment, that's Western Australia. So I think we can expect to see more people leave Victoria and Sydney to go to the opportunities in Western Australia once they can, as long as it all stays open and fluid and all that. Because there's a very profitable mining going on, and that's where the jobs are. So even though Australia itself might not be moving much in terms of population growth, a place like Perth could see a lot of population growth at the expense of other areas.
One thing I want to talk about before we move on is, you know, you and I have had this chat a couple of times over the past year, and this is about commercial property. Now, early at the start of the pandemic, when everybody started working from home, made it, to me, it was pretty clear that, you know, the last thing you would want to be in right now is an owner of an office building. And then a few months later, I mentioned some anecdotal evidence I mentioned in my area. Now, I live in Canberra in Melbourne, which is about 8 k's from the CBD. And one thing I noticed that there are a lot of retail and, you know, small office spaces vacating. They had many, many signs for lease, but then they were going for sale. However, they seem to be selling within a 4-week period, in spite of the fact that these buildings have been vacant for 9 to 10 months. Even then, I would say the vacancy rates around Campbell are still higher than normal compared to 2 years ago. So what is it that buyers of commercial property know that long-term property investors don't?
Well, I mean, it's not an area I specialize in, but I can only assume that they're pricing in some sort of future that involves whether it's a vaccine for COVID or some sort of return to normal, where perhaps a hybrid. I think the early signs are that companies are expecting a sort of hybrid situation to develop, where maybe your employee is at home 3 days a week, but if you want to collaborate or build team, you're going to have them in the office maybe once or twice a week, or even perhaps less frequently. Or we have a situation where things are repurposed and multiple companies use the same space, or that old WeWork idea kind of thing. And of course, we have interest rates and bond yields super, super low. So if you can get a tenant and get that, I mean, the yields in commercial property are still attractive as long as you can get the income off the property. So it's not, in terms of the way I view real estate, it's not something that I focus on in particular. My observation, or the way I frame things, is through the land market and how it responds to different stimulus packages and incentives and credit growth and all those type of things. So certainly the strength as far as the real estate market right now is with the owner occupiers in residential housing. So it's not a be all one all where property, everything's going up. Apartments are, not rising, and there's good reasons for that. So you have to be aware of these subtleties and niches and trends, and that's what I do with Catherine at Cycles, Trends and Forecasts. And
why don't we take it back to property stocks? Now, of course, whatever we say next is absolutely not a recommendation, but I do know you sort of like to trade the news when it comes to investing in stocks. What sort of news are you looking to see filtering through to property-related stocks that would encourage you to make one or more type of recommendation to your subscribers?
Well, I'll split out one thing there. I've got two strategies. So I have a trading service and an investment service. So because property by its nature tends to be slower moving, I tend to bias my investment recommendations for the long haul towards the property side, and the trading to more volatile, fast moving stocks like commodities, for example.
Might think too about them.
So I don't generally look to the property sector for big trades. I mean, yep. Obviously with a situation like COVID, that's very different, but in the normal scheme of things, they tend to be a bit slower movers. So I would classify it more as my investment area. And so I've done that with Cycles and Trends and Forecasts. We're building up a portfolio that really is quite open-ended. We have a view that property is going to rise for at least 4 to 5 more years. And you can really build a solid dividend paying with good capital growth prospects portfolio around that. And we can only go on what we've done so far, but I think all of the stocks, I've got them in front of me indeed, are up a couple, are flat if you'd like. But again, we're mixing dividends and capital growth and defensive qualities as well. So property, especially when the market gets volatile, once you understand the cycle, you've got the confidence in it. It enables you to buy those positions, in my view, George, and hold them very confidently because the long-term fundamentals are very, very strong.
It's funny. I know I started this conversation with saying that I didn't follow the cycle theory that you followed for such a long time. But I accidentally came on board with the viewpoint a couple of years ago when I started noticing the anecdotal evidence around property ownership change. And it was little things like, legislation changing to prop it up. Banks are tolerating larger and longer arrears periods than they normally would. Now, and again, this is not saying that it's happened, but now the politicians are changing the language around superannuation and, talking about maybe, just maybe, they might allow, first home buyers to dabble, or dive deeper into their superannuation to buy a first home. So it's interesting how, even though, as I said, I didn't follow your cycle and theory, I'm seeing more and more things prop up to make me think, actually, yeah, I reckon you're on the money.
Well, the interesting thing for me, I've dealt with this skepticism for so long now that as more and more of that bearish commentary falls away, these things become self-sustaining and price rises beget more rise. Interestingly, I won't say his name, but Catherine was talking about a well-known commentator who was very bearish about property years ago and made that public and was one of those guys talking it down. Now he's loading up on properties all over the place, bro, because it's becoming apparent that that there's a lot of money to be made. And in terms of financing, interest rates are so low, you can get rents if residential rent in some places to cover your interest. And you go after the capital gain. That's what people do. And we're seeing that with the owner-occupiers buying in. The investor class is still not really there yet. So when they come in as well, the platform is laid for a big boom.
Just before we wrap up too, part of Labor's policy when they went to the election a couple of years ago was to scrap negative gearing. And I read over the weekend that they've decided that they might actually be dropping that policy going into the next election. So it could be that, investors forming back into the market might not be as far off as we think. It could be only as far off as our next election, if that's the rhetoric coming out of politics right now.
Absolutely. Some of the stats, like the rents in Perth, for example, have risen very strongly. That's going to attract people because when you get rents rising, capital growth comes down the line. And for example, I think I saw a stat that Perth property is basically where it was almost 13 years ago. So the upside potential relative to the downside in the case of Perth, and again, and nothing's risk free, and you've got to know what you're doing and all that sort of stuff. But again, it comes with no money in the bank, with no yield on bonds. Bank shares have recovered, but the dividends aren't yet back to where they were. Yep. Property still has a lot of appeal for a lot of people.
Also, too, it ties into my working theory of this commodities boom we're about to face. And as you're talking about with, Perth might see more people move into that market on the back of, going where the jobs are or, just changing their lifestyle. One of the biggest things that hit a lot of mining companies during the pandemic is FIFO workers. So it could be that we look at some sort of 1970s style property boom with this is where miners are very keen to create long-term suburbs that actually surround their mines. So some of those ghost cities out in major commodity sectors in Australia might actually get a second wind this time around. Bendigo is already seeing enormous inflows of geos, metallurgists, mechanical engineers to come in and prop up their mining work in their mining sector. And it could be that it's not just Perth that sees it this time, but we actually see these mining cities of old, start to reinvigorate again.
Could do. That was certainly true of the last super cycle, as they say. It's interesting too. I noticed there's a company called Beacon Lighting. It's, again, not a recommendation, but it's on the stock market. They themselves have set up a situation where they're going to invest their surplus cash into buying properties. So they acquire where their stores are located, and they say that it's to protect from future rent rises, and it's part of the strategy that they want to build the company around. But Reece has done that as well. The plumbing group, they own most of the shops where they operate it. So we could see more activity like that where companies do it. And if there's an idea at the moment that inflation could come back, we don't know whether it's going to do that yet. But again, the way investors can protect themselves from inflation is through hard assets, and property is one of those. So again, down the track, you could find appeal for that reason as well.
All right. Well, I didn't actually set a timer this time because I knew we were just going to talk over it anyway. But my little watch tells me that we've probably gone well over our 10-minute mark. So before we wrap up today, what should we talk about next week?
That is a very good question, actually. Maybe we could do small caps or micro caps.
Yes. All right.
Some of the appeals there. Or perhaps if we get some comments from the viewers, what they want to hear about.
Actually, that's a really good idea. I know we have our Everything Guru who can create a survey. So people can actually click on a link. I'm not going to pretend I know how it works or how to create one. But why don't we pop up 3 or 4 options below and basically whoever gets the most votes, we talk about that.
Look forward to it.
All right, done. All right, Callum, I'll see you next week.
Bye-bye.
Bye.